Cannabis industry is growing rapidly, with annual market values expected to reach $30 billion by 2025. Though the industry has seen significant improvement, it still continues to face many challenges. For cannabis companies looking to expand into the US market, it's not as easy as simply setting up shop in a state that's legalized cannabis. Entrepreneurs are forced to deal with tons of legal and financial barriers. Many companies often have to seek out capital from Canadian or private investors. Banking is also another huge challenge for cannabis businesses in the US market. Congress has yet to lift banking restrictions on cannabis due to its Schedule I classification, leaving firms with little access to capital and certainly limiting the potential for expansion. The challenges don't stop there, though. Once the capital has been secured and banking has been resolved, you'll still have to plan for taxation. Federal tax, state tax, local tax, excise taxes. The list goes on, and each one is taxed at a different rate. In addition to paying these taxes, Section 280E of the Internal Revenue Code forbids businesses associated with the trafficking of Schedule I or II substances from deducting otherwise ordinary business expenses from gross income. Section 280E originated from a 1981 court case in which a convicted cocaine trafficker asserted his right under federal tax law to deduct ordinary business expenses. The next year, Congress passed 280E to prevent other drug dealers in the illicit market from writing off business expenses. It declares that trafficking controlled substances voids the potential for deductions in any amount. With 38 plus states authorizing some amount of state legal cannabis, 280E applies to more state-regulated cannabis businesses than the illicit drug dealers this section was intended to punish. So what can you deduct under 280E? The cost of goods sold, including all expenses directly related to the production of goods, and that is it. So standalone cannabis retailers can claim deductions for the invoice price of cannabis, minus trade, or other discounts. Until federal legality changes or cannabis is no longer a Schedule I drug, that is the only tax deduction available.